Welcome, ladies and gentlemen, to Commodity TV in the new edition of our interviews here. And we are in Herisau in Switzerland in our office and also in our TV studio. And it's my honor and pleasure now to talk to Mr. Warren Gilman, the CEO and also founder of Queen's Road Capital Investments. Warren, wonderful, good day. Great to have you here.
Okay, thank you to be here once again, speaking to you in St. Gallen. Appreciate it.
Absolutely. Thanks for taking the time. We just had a wonderful presentation in St. Gallen. That was great.
We did, yes.
I'm a shareholder of the company. I want to disclose that also.
Thank you very much.
Yes, welcome. My
so
pleasure.
am I.
Exactly. And you have slightly more shares than me.
Your viewers will probably appreciate that I bought $5 million worth more of shares last week.
Super.
Personally.
Yeah.
5 million.
That's how it should be.
And so now I own close to 10% of the company.
Yeah, and that's really a lot, especially at those prices. That is a really, I would say, a real commitment to your company and to what you are doing.
Yes.
So your company, I would say, is the one and only real convertible bond financier in the world of good mining companies and good mining projects. So
Correct.
we have been standing here, I think exactly 1 year ago. Stock price was like 65, 67 cents. Today you are 87, 88 cents. So already we made a win, which is no wonder when we look at the last 12 months is how you guys performed.
Yeah.
And the first thing I want to know is because last year we stood here and you said, hey, we're $15 million in NextGen and we will recycle the money. And I had no clue what recycling means. And then you did this. Can you elaborate a bit again on that? Because I think this describes fantastically your business strategy.
Yes. We took that 15 million convertible debenture, which we bought 3 years ago. It was our very, very first investment. We were a small company. We could only make $15 million was a big bet for us. We took that money, converted it into common shares, sold those common shares to an Australian institution, took the money and bought a 70 million US dollar new convertible into NextGen. Not only is it 70 million, so a lot more money, but it's also at a higher interest rate.
What is it?
They pay us 9% now.
Wow. That's a lot.
That's 9%, 70 million, $6.3 million a year in income that we receive, and we are honored to become eventually a NextGen shareholder by converting it yet again and maybe buying $100 million convertible. So that's exactly what we mean by recycling. More income for our shareholders, more exposure to a fabulous, fabulous asset, and we grow the company.
Yeah, exactly. And I think you did with that convertible, you did like 4 or 5 times your money, right? All in one together.
Oh, yeah. Yeah, more than
That's
5
really
times our money, because during that period of time, we were receiving coupons every quarter. Income coming in, income coming in.
Yeah, and
now we have even more income coming in.
Yeah, that's super. That leads directly to the dividend question, because my feeling is you will raise the dividend at least 10% per annum.
Yes, you're right. Absolutely.
It
will be double digit. It'll increase double digits this coming November. We pay our dividend every November, as you well know. It's our little Christmas present to shareholders. It's increased double digit since our first year of operation. We're now going on to our 5th year, and every year that dividend goes up double digits. And it will this year. And I can tell you already, since we know what our revenue will be at a minimum in 2025, I can already tell you that it will go up double digits in 2025.
Yeah, definitely.
So a good visibility on our dividend growth.
Yeah, super. Okay, so you're a big uranium bull as I are. So NextGen is obviously your largest investment. Then comes ISO Energy, which I'm also shareholder of. And what would be there?
We're looking at a recycling event there too, because we started off with ISO. NextGen was a $15 million convertible. We started off with ISO with a $6 million, so even smaller, because it was a smaller company and much earlier stage. It was only 20 drill holes. Well, that convertible now is worth about $50 million. We'll recycle that. What impact does that have on our revenue?
Positive, I would say.
You go from $10 million paying you 8%, that's $800,000 a year. That's nice, but it's not a big number. Recycle 50 million at 10%, you go from 800,000 to 5 million or more. So you're going up 6-7-fold in revenue that's coming into the company. And what happens to that revenue? It goes to you as a shareholder. It goes right out to you. So that gives you an idea of why I'm so confident in our dividend growth.
Exactly.
And that's just 2 investments. We have 7. We talked about NextGen, we talked about ISO, we talked about recycling. That just gives you an idea of our objective with all our investments.
Adriatic is going, I think, next month into production.
That's
as
right.
far as I know. So that helps you also because it
That's
would
right.
raise probably the valuation.
It becomes a cash flow producing company, very high margin mine, very profitable. Maybe they even start paying us dividends.
Yeah, would be lovely, of course. Then I saw you did an investment with Gold Royalty. So that's
right.
a royalty company. That's something I would say, really different because royalty companies are known that they give mining companies money up front so that they can deploy. Now you gave the financer
Exactly,
like a credit, I would say.
Exactly.
And so why have you done that? Where do you see the potential? And what's the reason behind it?
That's a great question. We're all about making money for our shareholders. Gold Royalty is, as you mentioned, a precious metal royalty company listed on the New York Stock Exchange. It's a established, secure company. It has paying royalties. The company has cash flow. It's actually the only company in our investment portfolio that actually has cash flow. All the others are mining development companies that have no income coming in. This one is a mature company listed in New York, run by an excellent management team that you are very familiar with. CEO, Chairman David Garofalo, who used to run Gold Corp. And it's ironic that it's perhaps the most well-established company that we've invested in. And yet, given the interest rate environment that we are currently in, it actually pays us the highest coupon in our entire investment universe. So they pay us 10%, even though they're a large, established, cash-flowing company. And we invested at them at a cyclical low. We all know that despite a very strong gold price, gold equities have been relatively poor performers. They've been orphans for the last couple of years.
Yeah.
So we got a great valuation when we invested. We got a great coupon in a very low-risk company. We see a lot of upside, both from the coupons and from the valuation of the company and ultimately our convertibility. And we've been right so far. The stock, I think, is up about 25% since we made our investment in November. So we're right at the cusp of entering into our convertibility territory. The convertible debenture is almost in the money 3 months after making the investment. 3 months. So it's all working according to plan.
In favor to us,
Yes.
absolutely. Now, and funny enough, I just received last week a research note from my friend Heiko Ehle from New York. He's H.C. Wainwright, and he said, Gold Royalty, $5.50. Is his target. So
tremendous. And it
would be lovely.
And that's not a big stretch because it was there 3 years ago when it was less mature company with less cash flow. That shows you the valuations on gold companies, how much they've fallen out of favor. We've come in at a lower price. It's been at $5.50 before. It will be there again. And well, at $5.50, our convertible debenture will be worth $100 million or more.
Lovely.
Tremendous.
I will take it.
Yes.
Definitely. Uranium. Obviously, we are both uranium bulls. Otherwise, you would not have done this investment. What is your view on uranium market? We are consolidating since 2 weeks a little bit.
Yes.
What is your feeling for this year, next year? How do you rate the market? Because I could imagine NextGen can easily double from here. And that would shoot your portfolio to whatever, $500 million value.
Yes.
Only from NextGen.
Only from NextGen. We've got about $250 million value in NextGen alone in our portfolio between the convertible and common shares that we own. I look at uranium very, very simply, like I look at all commodities. What's the supply? What's the demand? And other than that, I don't worry about it. And when you look at uranium, demand is very, very easy to see. You can't hide a nuclear reactor somewhere. We know exactly how many there are, and we know how much uranium they consume. So demand is very transparent. Mine supply is equally transparent, and we know that demand is about 200 million pounds a year and growing, and mine supply is about 120. So it's a fraction of the actual demand, and it's not growing very fast. And it can't grow very fast because it takes years and years to bring a new uranium mine into production. So that difference between demand and supply will inevitably continue to grow in the coming years. And there's very little new supply coming on stream. And in that environment, the answer is higher prices. It is inevitable. So yes, uranium prices in 2023 went up 100%, price more than doubled. There's no reason why it couldn't double again in 2024, simply because there's no new supply coming in. So can it go to $150 a pound this year? Easily. Could it get to $200 on speculation about what the future holds? Yes, it could. But I don't see it sitting here at $100 a pound. It will be higher.
Yeah, see it the same way. Let's talk a bit to the future. You have now 7 investments, I would call it. You have the next recycling event, but it would be probably with the same company. How many new projects do you think you can put on every year? Of course, it's a matter of money and of capital you can deploy, that's for sure. But what would you say could you easily handle, let's say, 2 new projects per year? And where do you want to be from here in 5 years?
Yes. Well, as you say, the size of our portfolio is dictated by constraints on our balance sheet, how much cash we have to spend, and constraints in terms of quality. We only want to do really good companies, really high quality assets. So I usually only make 1 investment a year. We're very, very picky. You know, I can see our portfolio growing to maybe 15 investments from the current 7. Beyond that, I would look very, very closely at quality. Are you getting the best quality? Where will we be in 5 years? In 5 years, we'll be a $2 billion, $3 billion company continuing to do what we do. When we started off, as I mentioned, we were doing $5 million converts, $10 million converts, because that's the size of the company we were. We were a small investor. Now we're growing and we've had success and we're recycling our investments. Now we're writing convertible debentures that are $50 million, $70 million we did with NextGen in October. That is not a limitation because mining companies require a lot of capital. To make a difference in that company's growth, $5 million check makes very little difference to their advancement of their project. They need 50 million, they need 70, they need 100. And I want to grow to a position where I can provide that size of capital because that reinforces the growth of the company that we're investing in. That helps them advance. We make a difference with a bigger check. So if I have 15 companies where we invest 70 to 100 million, you're talking $1.5–2 billion of capital that's deployed. Hopefully that'll increase in value and will be a $3–4 billion company.
Okay, that leads to the question, why is your share price still that low? Because I think you have like a 20% discount to your net asset value. So it's a little bit fancy because normally you should be valued par, let's say, or maybe 2–3% below. That's it.
And our objective is to trade at a premium, as many of the royalty companies trade at a premium. And I absolutely believe that our business model is superior to the royalty companies for all sorts of reasons. So I expect eventually when we get big enough, we'll trade at a premium to NAV. This year, at the low, we actually were trading at a 40% discount to net asset value. And that was because our second largest shareholder, Andrew Forrest, Australia's richest man, announced that he was getting divorced and had to settle his assets. And we had for 7–8 months a huge overhang on the share price. And he actually sold into the market at these low levels, telling everyone, yeah, I need to sell these shares. Well, last night he departed, sold 100% of his shares. I placed the entire block. That has taken that huge weight off our shoulders. The stock has rallied 20%, but we still have a long way to go. We're no longer at a 40% discount, but as you mentioned, we're at a 20% discount. We'll get rid of that 20% discount, trade near NAV, and then my job is to get us to trade at a premium. So that's the future.
Yeah, absolutely. So, but it's good for new shareholders because you get it at a discount. So you buy cheap. That's like the Warren Buffett philosophy. I want to pay less than the company is really worth.
It's the shares are on sale now.
Exactly.
You can buy them at a discount now and still receive the dividend.
That's the point.
Great value.
Last but not least, how do you see, or how would you rate for the near future silver and copper as possible investments? Because my feeling is those markets are also in a big deficit.
When you look at it simply, supply, demand, those are wonderful commodities to be in. We've got significant silver exposure through our investment in Adriatic. Adriatic was our third investment, and it's primarily a silver mine. We love silver. We'll do more investments in silver. We love copper. We'll do more investments in copper. We already have significant copper exposure with Los Andes Copper, Toronto listed, a massive copper porphyry ore body in Chile, but we'll do more. So we'll do uranium, we'll do silver, gold, copper. That's our home base. Those are things that it's always good to have the wind at your back rather than your face.
Oh, yes.
And when we're investing in those commodities, as we have seen and as we have benefited from the wind at our back in uranium this past 18 months, the wind will be at our back in those other commodities as well.
Definitely.
So it's a great place to be, Jochen.
Absolutely. A great place to be into Queen's Road Capital.
Indeed.
Thank you very much for taking the time. And I'm a happy shareholder, to be honest. I look forward to my dividend and to the race.
Yes.
And wish you well.
And I can only say, Jochen, that it'll be higher than last year.
Yeah, that's what I expect. Super. Warren, thank you very much and all the best for you.
Thank you, Jochen. I appreciate it.
Thank you. Yeah, ladies and gentlemen, that was Warren Gilman, the CEO of Queen's Road Capital Investments. And you heard it. It's a great company. Very safe, super business model, and I would even say one of the best future growth stories I've heard for a long time. Also, the fact that I like is at least 10% per annum shall the dividend rise, and that's what he did actually the last 4 years. So this is something what I really appreciate, but also I see the value in those 7 investments also for the future. And when Warren says next until the end of the decade, at least $2 to $3 billion value from today, 400 million, I would say he's gonna make it. This is why I'm a shareholder. Check out the company. It's trading at a 20% discount. That's what we like. So wish you a great weekend. Thanks for watching us, and bye-bye from Switzerland.